You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. Welcome back to Education Wednesday. It is time for episode 2 of our special Options Bootcamp doubleheader. For all of you cool kids in the Secret Club, you're getting it in your ear holes right now, instantaneously. Why wait? Tune in right now. Have all the fun out there. For all you podcast folks, got to wait a week out there for this one. Don't blame me. It's Dan. He's traveling. He's very demanding these days. And, of course, this is all part of our Double Pro Week extravaganza. We gave you Double Pro Q&As yesterday and the Hot Seat Double OPRs earlier today. So our Secret Club folks already heard the live huddle episode we did with Brian. For all you podcast folks, that'll be next week as well out there. So a whole bunch of content coming at you. Hope you're enjoying our Double Pro Week Palooza. Where can you go to participate in this and everything else we're going to do? A lot of stuff coming down the pike for you pro members in the future. TheOptionsInsider.com/pro, or you can go where the cool kids go, /Secret Club. They'll both get you there. You can join that. Get all the exclusive content we're doing, the Pro Q&As, the oddities every Friday, the giveaways. I think I see one of our winners lurking in there right now. I think we're putting together. If our producers haven't reached out to you, they will be shortly there. Mr. Age, to get your custom, bespoke, one-off Options Insider Pro Trading Crate put together with all sorts of fun things. So if you want to join that, it's a fun place to go. TheOptionsInsider.com/Secret Club. And joining me to help me hold the fort for yet another jam-packed episode of Options Bootcamp goodness, the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the program. It feels like we just did this, sir, does it not?
You know, it's like deja vu all over again, Mark.
That it is, listeners, as we keep on rolling. Actually, before we keep rolling, let's get into some of the goodness we have in store for you guys. We ask you guys, if you listen on demand, and we get it, some people can't make the live or they just don't have the wherewithal to join. Hey, we get it. If you listen on demand, if you're enjoying what you hear, all we ask is that you rate and review it so all the new folks can continue to discover the content. Just like this week's reviewer, I believe this might have come from Podbean. I'll have to check. This is from Adzao. He says, love you guys! ! Entertaining and informative is just the beginning. Another exclamation point. You know, Adzao, you're so awesome, I'll even forget the misspellings that are in here, because that's just so nice. So, Dan, what do you think? He loves us because we're entertaining and informative, and that's just the beginning, sir.
I mean, he did leave out handsome, but, you know, that's okay.
That's implied. You know, that's implied. You know, at least for me. Your end, a little bit more dubious out there. But there you go, Adzal. Thank you, and everyone else who takes the time to rate and review. We really do appreciate it as we keep on rolling right on into the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. Let's get going. Before we dive into the questions, Dan, I want to pick your brain on this. This is our question of the week right now, hot and heavy right now, which is kind of interesting to see how the votes are breaking down. We're asking you, in the wake of the relaunch of the new flavor of XIV, aka SVIX, aka an inverse volatility product. You don't know what I'm talking about, go check out some of our recent shows on volatility ETPs out there, listener. Remember, we said the inverse one that died infamously in 2018 was XIV, and now a new version of that has just relaunched just in the last couple of weeks. It is called SVIX, and it attempts to do what XIV did without blowing up, which is, of course, be constantly short VIX. And if I tell you that, you hear that, you might think, wow, that's dangerous. How can you be short VIX all the time? It does spike. That is a challenge. So we put that to you folks this week. We said, the launch of SVIX has rekindled the debate over whether these products should even exist. So we put the question to you. Should inverse volatility products exist? Yes, they serve a purpose, or no, they are too dangerous. Mr. Dan, I have a feeling I know how you're going to weigh in, but what are your thoughts? And then more importantly, what do you think our audience is voting for?
I'm not a fan of them. I mean, I hate to say it, but I'm not. To me, the whole concept is ridiculous because, like, I've always said, short, ETFs are for people who don't understand options. But a short ETF on VIX, that doesn't make any sense. Because if you understand VIX, you understand options extremely well. So what is the frickin' point? It doesn't make any sense. I don't get it.
Well, so far, Dan, actually, by the way, we just had Brian on OPR. He was in the same camp as you. So you two are in the anti-camp. Unfortunately, Dan, you guys are in the clear minority of our listeners. Only 20% agree with you and say, no, they are too dangerous. A whopping 80%. It's a pretty robust majority saying, yes, these products serve a purpose. I get it. We got some bleeding edge folks in our audience out there, but I didn't expect it to be this overwhelming. I thought it'd be closer to 50-50, 60-40, especially given the results of some other polls we've done. I know these products are somewhat contentious, as we just heard. So, what are your thoughts? Get over there at Options. You got about a day or two left, listeners. If you're listening to this, if you're listening on the podcast, unfortunately, that'll be next week, so it'll be too late. But you can go check out the results for yourselves on our at Options handle. You can also find what our question of the week will be next week, which is always something fun. Speaking of question of the week, Dan, you guys are always getting questions over there at MTM, left, right, and center. What are some of the hot, cool, intriguing questions you've heard in your MTM question of the week, sir?
Well, I will tell you what. I just had a question. Oh, yeah. I was talking about, excuse me 1 second here. My allergies are killing me out here. I'm out in Las Vegas and I don't know, must be different allergies.
That's what it is. It's allergies. It's not late night alcohol consumption or anything along those lines. Gambling till 3 a.m. on the poker table. It's not that at all, I'm sure.
No, you would never see me doing anything like that, Mark. You know me. You've been in Vegas with me.
Actually, I have. You're We won't speak of such things, sir. Yes.
No.
It's a family-friendly program.
Well, yeah. So one of the things that somebody asked me today, and it's a little bit esoteric, but the difference between time at price and volume at price. So this is like a whole way different thing than we typically talk about, but that's why I'm bringing it up, because we don't typically talk about it. So there's sort of this school of technical analysis, and I don't know, for lack of a better term, we'll call it market profile. Although I think some purists might differentiate some of these things a little bit more than I'm lumping it together. And it's kind of a study of where prices have traded, like where of any stock or future, ETF, index, whatever, traded over a period of time. And you're looking for frequency, whether it's frequency by time, like hey, SVIX traded 1370 more times than any other over this 14-day period. So they would look at that as like fair value, some people would call that. But the other way to look at that is hey, SVIX traded, and I'm just making up numbers, by the way, 1356, it traded the most shares at 1356. So it's the frequency of like the greatest times a particular price traded, weighted by either how many times it traded there or by how much volume it traded there over a period of time. And, it just kind of becomes useful. What a lot of people will do is they'll say, okay, so if I'm using price at time, or excuse me, time at price, this price traded the most frequently during this period. So that's what we'll call fair value. And if it deviates too far from there, then we're going to assume that that's a breakout and sort of jump on. So just a little thing that I figured I'd share, since I don't recall us ever talking about that on the show. And it's just one of these things that a lot of people watch, and I figured I'd throw it out there. If anybody's interested, you can just hit me up at our website, and I've got a resource where you can learn some more about it.
There you go. A little bit of technical analysis in your life here on the show, listeners. MTM Market Taker, 2Ts.com, the place to go to learn more. As we keep on rolling, let's go back out here. Let's go to this one from Big Tim. Big Tim says, remember we were just talking about this, Dan, about Nanos, and saying we were kind of surprised that they had even launched. They're supposed to launch on March 14th. And then you and I had both neither heard nor really seen anything about these things, so we weren't sure they had even launched. Well, Big Tim wrote in to say, I can confirm that Nanos are live. Not doing a ton of volume, but they are live right now. And yes, I can confirm this actually, Big Tim, because I have looked myself. And also, we were doing our pro Q&As yesterday, and we had the Flow Master in there. Mr. Henry Schwartz was listening live, and he's one of the people at SIBO who was instrumental in creating and launching the Nanos. So he chimed in to say, yes, they are live, and yes, they're trading about 1,500 contracts a day right now. He said, so still not a ton of paper, but getting there. And he says, using a commission broker, they are not very tradable yet. I did just pull it up. If you want to check it out for yourselves, listeners, they have, looks like a separate index that they are tracking off. So that's what was throwing me off. I was looking for them in the regular listings. They actually are off this index of Nanos, Nanos, you have to search for. And if you find that, you can find the options on those. And it's effectively just a smaller size S&P, obviously. And I'm looking at it right now. It's actually done some paper today. 2,742 Nanos have traded today. And their ADV is about almost 600. So a little bit less than Henry was saying out there. But still, I guess that's something. So Mr. Dan, there we go. We were kind of speculating whether these things were live. It turns out they are, just not lighting the world on fire yet. And as Henry puts it, too, if you're using a commission broker, they're still not very tradable, which implies to me that the spread's not exactly great. Have you seen any Nanos since the last time we chatted, Dan?
Well, I also did my research talking to a friend of mine who's kind of in the know, and also confirmed at the time, I was going to bring it up to you as well, that they're trading, but they're just, apparently they're not getting the backing of the big firms. And so, like, just because an exchange lists them, if you can't trade it through your broker, then it doesn't matter. It's a tree falling in a forest that nobody hears. So it's unfortunate. That's kind of what got screwed up with them the first time around. And I was sure thinking that this time would be different. It sounds like as of right now, it's not, but I think it's potentially good product. So hopefully they do get it figured out.
Yeah, thanks for chiming in there, Big Tim. We'll keep an eye on these. I mean, when I had the SIBO folks on the network, I think it was back last October, to discuss this, I specifically asked them that. I said, hey, what are we going to do in terms of market maker support? Because the spreads were a big issue last time. And they told me they had it covered. So we shall see. Again, these are early days. It's a brand new product. It could take off, and there could be a demand for this. So we shall see. I'm willing to be open-minded on such things, even though my initial thoughts of the notion of a 0 or 1 multiplier option effectively is what's the use case for it. But hey, we shall see. So far, at least almost 3,000 people today, or 3,000 contracts worth of use case has developed. So that's not nothing. But again, look for them Nanos, Nanos, listeners, if you want to try to find these, and that'll help you find the options information on them. Let's go to JZ3. Dan, he says, how do you decide between buying a 1-by-2 ratio put spread and selling the put outright? Thanks so much. I'm really trying to become a better options trader, and you are helping me greatly. Well, you're welcome, JZ3. Keep plugging away. And this is an interesting conversation. I was just having this on our Options Oddity show last week with the Rock Lobster himself. Mr. Dan, where do you draw that line of demarcation? When do you say, hey, I'm just going to sell the put versus maybe I'm going to do the old 1-by-2, buy one and selling two? So you're effectively short that same put, but with a little bit of a ratio to cushion you there.
Well, I mean, I look at them as a little bit different, So between buying a 1-by-2 ratio put spread, so I just want to be clear though. So buying a ratio 1-by-2 put spread, is he saying buy one put and sell two lower strike puts?
Yes, that's what I take it to mean. Yes.
Yeah. I mean, to me, those are extremely different trades, right? Because with selling a put, you just need it to be above the strike price, where with buying one put and then selling two shorter strike, I mean, what you really want is you want the stock to go down to, but not through the short strike price. So, here is some of the best advice that I can give. And we are, you guys know, we've talked about this before. We're having an in-person retreat this summer in Sonoma, June 2nd through 4th. And we're covering the most important topics. Anybody who's wants to be a successful trader bad enough to get on a plane and come to California with us, we're giving them every single thing they need. And one of the classes we're doing is Greeks and modeling trades. And, notwithstanding that it's going to be an hour and a half class and there's a lot to it, but I'll give you the Cliff's Notes. You should model every single trade you're thinking about putting on. Look at the P&L diagram that it draws, the risk graph, and see where's the best case scenario? Where do I, now that I'm looking at this, forget what I thought this trade was, where do I actually want the stock to go if I put this trade on? And also look at the Greeks. That tells you a similar story, but a little bit different. And JZ3, that is always going to help you make better decisions. So definitely look into modeling. If you're one of the folks joining us in California, you're going to get a whole big long class on that, and it's going to be great.
There you go. Dan's retreat for the wicked out there, the wicked who want to get a little black hat action of their own. Now, JZ3, this is an interesting question. I think we could talk about it for quite extensive. Maybe we should do a full show down the road about this. We were kind of, like I said, discussing this on the Options Oddity show not too long ago. We had a couple of specific examples we were talking about there. One was Oatly, which was a very cheap name, around $5. I believe it's below $5 now. So right there already, your choices, your options, pun intended, for if you wanted to do a 1-by-2 put spread there, you really don't have many strikes to do it with. So you left holding the bag. If you wanted to do it there, you kind of only have the choice of selling the put. So right there, just from a dearth of strikes, you kind of can only do one. And also, if you really just want to keep things simple and you have identified a level where you're okay buying and underlying, and you want to get paid a little premium to do it, there's nothing wrong with selling that put. That is an easy, straightforward use case to do. The 1-by-2, as Dan pointed out, a little bit more nuanced, a little bit more going on. You're buying one out of the money put and you're selling two farther out of the money puts against it. So now you have a long premium position where you want a long vol position. You want that underlying to move a little bit. You want it to move down, but not too far because you're short two. So obviously, ideally, in this scenario, Dan was talking about modeling. Ideally, you want that underlying to go straight to that short strike and just sit there. Doesn't always work out. Another example we were giving for that was Robinhood, where we were actually looking at we had sold some puts outright in the past when the stock was lower, and then the stock had rallied a bit. I think it was around $14, $15, maybe 16. And so we're looking instead at 1-by-2 put spreads out there, because for a while there you could get credits to do them. That's another way I like to do those, is if you're going to buy one, sell two, you'd like to do it for a credit. It wasn't entirely possible on that episode, so I think I ended up doing one for a couple of cents just to kind of have an educational example to talk about on that show, which, by the way, looks like that one's working out pretty well right now. But you have to understand what all the moving parts are with that trade. You're long one, you're short two. If you blow through that strike aggressively, you have that long one put to cover you for a little bit. Eventually, you will start losing money. And also, you will end up picking up the underlying at that short two strike. So just bear all that in mind. There's a lot more moving parts. So for a lot of the audience of this show, I probably would recommend just straight up selling the put. It's much more straightforward. You can understand it. But if you get a little bit more nuanced, there are times where that nice little ratio put spread, especially for a decent credit, is an interesting trade as well. And it gives you a little bit more cushion to the downside if these types of things do. If you're not really sure in terms of drawing that line where you want to buy the stock, that gives you a little bit more cushion from a break-even perspective, depending on how you structure it. We can do, again, a whole show on that. Maybe we will in the future. Let's go out here to, looks like a little bit of love from Ron is Wrong. You're not wrong. You're listening to this show, Ron. This handle sounds familiar. I think you've written in before. I think you wrote in on a recent show, actually. He says, Mark, just wanted to let you know that you're a great host. Wow. Well, thank you. He says, you bring a happy, funny, and positive energy to a topic that could be quite boring. I really enjoy it. Keep up the great work. A lot of us on the BCRX board are big fans. Well, that's very kind of you, Ron. I appreciate you, and everyone else takes the time to write in and also takes the time to listen to our shows. And yeah, you have noticed we do endeavor to make these shows a little bit more fun, a little bit more engaging, a little bit more informative. When we first started doing this, it was 15 years ago, believe it or not. The only real derivative, there was no on-demand audio options content at all. We kind of created that with the first ever options podcast. But even on the written on the website side, if you look for derivatives information, it was very dry. So that was one of our MOs from the beginning. This stuff can get very dry very quickly unless you present it in a more engaging, informative type of style. So that's what we've endeavored to do, not just with this show, but everything we do here on the network. Volatility views, that stuff can get very esoteric. You're talking about variance and all these crazy things there. Crypto rundown, talking about the nuances of staking and all the madness going on there. Futures options, this week in futures options. We talk about a lot of esoteric things on the network. And you're right, that could easily get dry. So we endeavor to make it a little bit more palatable, a little bit more interesting, a little bit more engaging for you folks. I can't speak for Dan, but I do appreciate. Thank you for your kind words, Ron. Thank you for noticing, and for everyone out there who takes the time to listen and enjoys the content. We appreciate all of you. All right, let's get out to this one. Let's go to, I like this handle, Melphasis. Melphasis says, Mark and Dan are my faves. Well, thank you, Melphasis. I listen to you guys a lot, and I know a bunch of people on Reddit do as well. Well, that's 2 boards in a row, giving us some love. Well, thank you. I think the other one might have been a StockTwits board. He says, have you thought about creating a subreddit for the show so people can ask questions directly? And do you guys have a personal favorite board on Reddit? Well, interesting stuff. Dan, do you have a personal favorite board on Reddit that you surf on? And then I'll answer some of the other stuff in a minute.
Oh, you know what? I am a very selfish Redditor. I go on there and it's a very, very good news source for certain things. And so I'll go on there and I'll get information. I'll lurk on some of these stock-oriented channel or subreddits, but I don't participate the way I probably should. So yeah, no favorites. And I'm notoriously bad for having a short attention span. And like, I could see myself creating the subreddit channel, creating the subreddit and, 3 weeks later losing interest and, then I'm not answering people's questions. Everybody hates me.
Yeah, we have toyed with this in the past. In fact, for those of you who don't know, the original incarnation of the Options Insider, our website, it was back in 2007, and we had a forum along with it. It was pretty active for a while. Reddit was kind of still just a blip on the radar. It existed, but it was nowhere near what it was. It is now. Things like Dig and other things were pretty big at the time. And so we had a pretty vibrant message board and forum community for a while. Things like Elite Trader were around. There were a few others out there. But, monitoring that, all that kind of, the stuff that goes along with that kind of got laborious. And it became more of a hassle than it was worth. So we kind of shut that down. And in the recent iterations of the website, as you notice, there are no forums. Plus, social media seems like it took over a lot of that use case for people. So we didn't really need the forum. That said, there still is a demand for Reddit out there. People use it. We have toyed with the idea of creating a subreddit for the show. Right now, we have a lot of venues already. People can get access to us, so we're not hurting for questions. And, of course, we have the live for folks who want to engage directly. But it is an idea. It's something maybe we will consider down the road. So I appreciate the suggestion, Melphasis. And I don't have a personal favorite board. I'm kind of like Dan. I don't go there that often. When I do, I kind of just tend to lurk. And usually I go to check out some of the big options boards, see what people are talking about, see what they're into, what they're interested in, and just kind of give us a sense for what folks are intrigued by. All right, Dan, we're kind of coming up against this. I will give you a choice. We could do guy who's got a question about exercising an option on the 30 strike. We can do options on cheap stocks, kind of a related question to that, or just a guy who says he sees a lot of FOMO on Twitter about options trading. You pick, sir. Dealer's choice.
Let's do the FOMO one.
All right. I had a feeling you were going to go FOMO. Let's go to this one from Neil. Neil says, I feel a lot of FOMO when I look at people talking about options trading on Twitter. It seems like everyone is just basking in massive gains while I'm struggling to make a few bucks here and there. I may even lose now and then. What am I doing wrong? What are these folks on Twitter doing right? Oh, Neil, we just talked about psychology on the episode not too long ago. We also did a great pro Q&A with a great expert on trading psychology you may want to check out. But yeah, that's the first place you need to start. That's what Twitter is, just pretty much built on FOMO, whatever it is, trading, lifestyle, whatever it is. People make you want to, live through their eyes, and you want to be those people because everything looks so cool. But they don't post their losers. They don't post that stuff. This is one of the first lessons I learned when I walked on the floor of the SIBO. There was no Twitter then, obviously, but the same lessons apply. There were certain guys that you knew would come up to you, and they couldn't shut up about how much money they were making, how great of a trader they were, how profitable the previous day had been for them with a certain trade. And you learned really quickly those people were usually full of it, if not all the time full of it. Those are usually probably some of the worst traders. The best traders were not in your face about how much money they were making. They kept it to themselves because they didn't want people coming into their pit or their crowd or replicating their strategy and taking money out of their pockets. So that was usually the first example, that those folks didn't really know what the hell they were talking about. So you learn to adjust, and whatever they're telling you they're making, cut it in half, cut it by 90%. And that's probably a more realistic estimation. So I think if you take that same approach and apply it to Twitter, I think you'll be a little bit happier camper. Dan, we have to say for Neil, he's just feeling the FOMO. Everyone's just posting all their winners on Twitter, and he's having a hard time dealing with it, sir.
Yeah, you know what? I know this guy in my personal life who is kind of a real douche. I don't know if you have to edit that one out, but kind of real douche. And he decided to leave his gig managing musicians and become an option trader extraordinaire. And I just know he's a gigantic douche. He's always bragging about everything. And so, I find myself at a party with him, even though I tried to avoid him. He came up to talk, so I figured I'd be polite. And he's just bragging about all the money he's making trading, and I'm just pretty deadpan. And he's like, yeah, is it normal to have, such success doing this? And I'm like, well, I find that most people lie about their trading results, especially, when people are bragging about it. And I wasn't specifically talking about him, but I think he picked up on it and he just sort of walked away. But yeah, especially on social media, everybody's just pounding their chest about something. And when it's something like trading where people want people desperately to think they're just so smart and they know that they can't prove either way whether they're telling the truth or not, you get a whole bunch of people BSing you. Now, don't get me wrong. You can make a lot of money trading. Once you really nail it, you put in your time to train, right? To really get a system down, you can make a lot of money, but don't believe everything you hear on Twitter.
Good advice for life there, Neil. Yeah, take a break, take a deep breath, dial it back. Don't believe 99.9% of the things you see on Twitter to begin with. Probably a good starting point there. If you're looking at people for trading perspective, make sure they're also posting their losses, and you learn a lot more from that than you do from the winners. People who are just sitting there posting the winners, the ones I'm talking about. They made a bazillion %, no risk, They're probably showing a picture, posting a picture in front of like a private jet or a fancy car with women hanging all over them. All those kind of pictures. You know what I'm talking about. Go run screaming the other way. You don't want to be near any of those kind of people, and they're not certainly reputable sources for anything in the trading or options. But that's why we're here. We try to be the counterpoint to all that madness. You're not going to see Dan and I out there, or maybe Dan, I can't speak to him, posing with the Lamborghinis and the Learjets and all that crazy stuff. We want to just give you the scoop, the straightforward, no bias, no BS info on what it really is like to trade these options things. And Dan and I know a thing or two. We've been around for a thing or two. We didn't just learn about options last week and convert from being a music manager to an options trader. Mr. Dan, I have a heart. What a strange, your worlds colliding like that. Music and options all coming into one, sir.
But wait, Mark, I just want to clarify. So the picture online of you surrounded by all the dudes in Speedos, like that's...
Well, we were recreating the volleyball scene from Top Gun. That was a different thing, sir. That was not at all related to options trading. That was a film nostalgia post.
Oh, no. Okay, yeah, I just wanted to be clear.
Perhaps the manliest scene in the history of film, sir.
Excellent.
If you couldn't tell, I was Iceman in that photo. Very cool. All right, Mr. Dan, if folks want to reach out to you to discuss your social media profile and everything else, where should they go? What should they do?
Make your way on over to markettaker.com. You know where to find me, and glad to help any way that we can. We got lots of free content. Love to answer questions from our listeners. So, yeah, you are welcome to come and join us.
Oh, damn! So we got more of our live listeners who are getting converted to the Nile train. You have spread your influence far and wide, sir.
Nile, buy it. Buy it while you can.
Nile pops after this episode. You'll know why. All the buys. Dan's got 10 million shares he's sitting on waiting for that pop, baby. All right, listener, that's going to do it for us this week. Don't worry, there's still more great pro Q&A and just more great content coming at you this week. We have, of course, This Week in Futures Options tomorrow, as well as episode 2 of the Option Block, part of our Double Pro Extravaganza. Friday, of course, we've got all things volatility views, noon central, as well as for all you Secret Club kids, we got options oddities coming up after that. And then back again in 2 weeks now, live, with the next episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.